So we could start now. Ashwati, you can take over.
I can hear you. Can you hear me?
Yes, sir.
Yes, we can. Yes.
Okay, go ahead. Go ahead, Pradeep.
Thanks, Ajay. A very good evening to all of you. I'm Ashwati Udayarajan, your MC of the session. And on behalf of the Bahrain chapter of ICI, I would like to welcome all of you to today's event on trade-based money laundering and trade finance frauds, held with the support of International Chamber of Commerce, Bahrain Division. Before we start, a few housekeeping rules. You might be knowing all of this already. Please mute your mics during the session if you are not the speaker. If you have any questions during the presentation, kindly type them into the chat box and we will address it at the end of the presentation. Also, as you know, there will be an exciting quiz at the end of the session. And in case you haven't downloaded the Kahoot application, please do so. So let's begin. To begin with, let me call upon our chairperson, CA Ajay Kumar, to deliver the welcome address. Ajay?
Yes, thank you. Can you hear me? Yeah, okay.
Yes.
Thank you, Ashwati. Thanks for that.
We'll address it at the end of the presentation. Also, as you know, there will be an exciting quiz at the end of the session.
Okay. Sorry, respected chief guest, Mr. Rashid Ibrahim, esteemed speaker of the day, Mr. Pradeep Taneja, dear members of BCICI, overseas chapters of ICI, friends from the ICC Bahrain, compliance and AML professionals group in Bahrain, and invited guests. Good afternoon to all of you. So before I start the address, I just want to reiterate the support from BCICI for the vaccination drive that is being conducted by the Bahrain government. And I congratulate all the members who have already taken their vaccinations. And for those who haven't done so far, we encourage you to do so. We also have our thoughts and prayers for all those who have been affected by COVID, whether it's in Bahrain, in India, or the world over. So let's keep them in our thoughts and prayers. In terms of the BCICI activities, so we are getting into the last couple of months for this year's term. But that hasn't stopped the flow of the value-added programs that we have been bringing to our members. We recently completed the second batch of the Excel macro session. The stock market technical analysis workshop is about to finish tomorrow. We have a finale of the Speechcraft program, which is conducted in collaboration with the ICAB and C2A Toastmasters, which will happen next Friday. We are also running a batch on Lean Six Sigma Green Belt certification, which is also in progress. So there's a lot of learning that we have been facilitating over the last weeks and months. In terms of well-being because of the COVID, I think we are very mindful that not only the members but their family also needs to be engaged. And as part of the well-being efforts, we celebrated the theme for the month of May as celebrating Indian culture at 75, which is part of the India at 75 celebrations. So we had sought entries from the members to showcase their culture for their states, either in the form of art form or traditional, dressing with a message, etc. So we thank all the members who came forward with their entries, and which was also circulated to the members yesterday. We also conducted a successful online chess tournament. Unfortunately, our cricket tournament still had to be postponed again due to safety considerations, which I believe is paramount. In terms of our upcoming events for June, we'll be extending the India at 75 celebrations in June as well, but we will focus on yoga and well-being. We already started the training sessions. We'll start the training sessions for the BCICI Surya Namaskar Challenge, which will be held on 25th of June, a unique event that we are planning. The trainings will be conducted from 1st of June by our immediate past chairperson, CA Mahesh Kumar, who is also a certified yoga trainer. We'll also celebrate the International Day of Yoga during the month as well. So these are things that we are looking forward to in June. Plus, we'll have technical sessions that we are planning as well. As mentioned, the nomination process for the executive committee for the next term is ongoing, and we will be opening the nominations in the next few days. And we'll also hold a election meeting in June. That's also upcoming in June. I express my thanks to C. Ashwati for taking up the MC role today. So this is part of our inclusiveness effort to have non-ExCom members take up roles at our events. I request other members who have not done such a role in the past, please come forward to take up such roles. You can reach out to me or our secretary, C. Sharmila, if you are willing to participate in future events. Of course, we are there to support you through the process, entirely. So please feel confident and to come forward to take up such roles. I also extend my thanks to CA, our ex-com member CA Vivek for handling the quiz session, which will happen later. Now, coming specifically to today's event, first of all, I'm very, very happy to see such a good turnout for this event. The registrations were quite huge, and I can already see that translate into quite a lot of numbers already. And this is also one of the examples of our objectives of collaboration with other bodies. We are very happy today to have the support of the Bahrain International Chamber of Commerce for this event. As you are aware, the Ministry of Foreign Affairs of India had designated the overseas chapters of ICAI to be equivalent to that of a trade body. And as such, we do see a lot of synergies, with the bodies like ICC. So this is, I hope, a beginning of a good collaboration going forward as well. I'm really thankful to Mr. Rashid Ibrahim for sparing his valuable time to join us as the chief guest today, despite this being a weekend. So thank you so much, sir, for that. And we really look forward to hearing from you shortly. Uh, we are also very fortunate to have Mr. Pradeep Taneja, who's really an authority on trade finance, and he has so many years, the wealth of experience. And I'm really glad that he's joining us as a speaker today. He's also a personal friend and mentor for me as well. So, and of course, the topic trade-based money laundering is something very close to me because I'm a AML officer in my day job. So I'm really looking forward to this particular session. And I wish all of you a wonderful session, and also stay tuned for the Kahoot quiz at the end of the session. So with that, I thank you for your listening and hand back the control to C. Ashwati. Over to you, Ashwati.
Yeah, thank you, CJ. As Ajay mentioned, today we are quite fortunate to have with us the chairman of ICC Bahrain chapter, Mr. Rashid A.R. Ibrahim, a prominent Bahraini lawyer and arbitrator, renowned both locally and internationally. He is a member of the Board of Trustees of the Bahrain Chamber of Dispute Resolution and founder of Public Notary in Bahrain. He established Rashid A.R. Ibrahim Law Office in 1974. He is a member of ICC Arbitration Commission and is external legal counsel to several banks and companies. Sir, we welcome you. We would be privileged to hear a few words from you.
Good afternoon, everybody. I'm sorry for the delay in regard to the, fitting our connection with you. As I'm not an expert in IT and Zoom meetings and so on. Nevertheless, I take this opportunity to express actually my thanks and appreciation to Bahrain chapter of Indian Institute of Chartered Accountants, BCI, CAI, to have requested ICC Bahrain National Committee to support today's webinar on trade-based money laundering and trade finance frauds, to be delivered by my dearest friend, Pradeep Taneja, who is the chairman of ICC Bahrain Trade Finance Forum. He is as well a board member and co-chair of ICC Bahrain. The topic chosen by you, BCI, CAI, on trade finance frauds and how the mechanism of trade finance can be used or misused to launder dirty money of criminal origin for money laundering is a matter of serious concern for the government's regulatory authorities. ICC shares these concerns globally, and I believe that it is a very timely initiative by BCI-CAI to arrange this webinar to raise awareness about TBML and frauds. ICC Bahrain has actually 2 active committees, which we will invite you to join if you like, and if you can, and if you wish. We have a lawyers committee and trade finance forum, and has its representatives in the ICC Banking Commission, Arbitration Commission, and Commercial Law and Practice Commission, and several of ICC international task forces, as well as we have a representative from Bahrain who represent Bahrain Gulf and Bahrain ICC into the International Court of Arbitration. Pradeep is a member of the ICC Banking Commission and has participated in several of the global initiatives of the ICC, including endorsement of UCP 600 and URF 800 by United Nations. He was a member of several ICC groups, namely URDG 758, URF 800, USP 600, and ISDGP. I hope that BCI CAI members will be immensely benefited by this presentation and will increase their awareness of TBML and trade frauds amongst BCI CAI members. I wish you all a very best in this session and hope to be of a collaboration in the future by both our institutions. Thank you very much. Thank you for inviting me, and thank you for giving me this chance to be your guest. Thank you.
Thank you very much, sir, for your kind words. And once again, thanks very much for joining us today. Moving on to our most awaited technical session, trade-based money laundering. As you all know, it is one of the common methods of international money laundering. It crosses sectors and international borders and is very hard to identify since it's hidden in plain sight amongst legitimate economic activity. To provide us with more insight in this subject, we have with us today a professional trade finance banker with 41 years of extensive banking experience in this field, Mr. Pradeep Taneja. He is a founder member and chairman of ICC Bahrain Trade Finance Forum since over 17 years. He is also on the board of directors and is the co-chairman of ICC Bahrain. After serving the banking industry, he now has set up his own consulting company. He advises banks, import-export companies, law firms, trading companies, etc. He is a member of ICC Banking Commission representing ICC Bahrain and several of its global task forces. Mr. Pradeep Taneja has the distinction of being the first Indian in the world selected by ICC to be a part of an international rule writing exercise. Over to you, sir. We are very much looking forward to your session. Sir,
unfortunately, I'm not able to share the screen. Host disabled, participant screen sharing. I don't know.
You can try now, sir.
Shall I try now? Yes. So first of all, thanks Ajay, thanks Aswati and all of you for your kind words. Let's not further go deep into it. Let's come to the point. So this is my presentation. I hope all of you can see the screen. Trade-based money laundering and trade finance frauds. We know that this is an area of concern. AML has been an area of concern from the last several years, but regulators were forced to enact Money Laundering Regulation Act and laws after the unfortunate attack on the World Trade Center. And after the US Patriot Act was approved by the government of US. So what I'm going to present to you is just to explain what is trade-based money laundering, what are the traditional means of trade-based money laundering, what are the typical typologies which have been created by the Financial Action Task Force, which is the intergovernmental body on sanctions and frauds and whatnot. And I will also explain to you about few court cases and ICC rules. So what is TBML? Now these are actually academic, these definitions that basically everybody knows about AML. And Ajay told me that PCI, CAI also did a webinar on AML as well. So you know all about layering and etc. So as far as TBML is concerned, is the same. Basically, it achieves the same objectives, but the only difference is the method. The method in TBML is the use of trade documents, because what happens is banks take millions, hundreds of millions of dollars of decisions based on papers every day all over the world. Globally, it is believed that under letters of credit itself, a little more than $2 trillion worth of business is done under LCs, under letters of credit. Now, what lies behind those papers and documents, nobody knows. The banks, they do not know. And the problem is that these papers can be forged. So the US officials in a financial crime enforcement conference in United States recently, I think about more than a year ago, they defined TBML as an alternative remittance system that allows criminal organizations the use of trade to legitimize, conceal, transfer, convert large quantities of illicit cash into less conspicuous assets and commodities. This is what was defined by the Financial Action Task Force in its paper on trade-based money laundering. That was back in 2006. So TBML is the process of disguising the proceeds of crime and moving value or money through the use of trade in an attempt to legitimize their illicit origin. Later on, several regulators in the world actually have adopted this definition. Most recently, it was the Monetary Agency of Singapore and ASIP. ASIP is also a Singapore-based organization, which is basically the AML and CFT industry partnership. That's ASIP. In the same paper on TBML, FATF said, as the FATF anti-money laundering AML and CFT standards become increasingly effective, abuse of the trade system is expected to become increasingly attractive for money launderers and terrorist financiers. Well, I hope everyone agrees to that statement, but I had one reservation. Actually, what happened was when FATF was creating this paper, they didn't know what is trade. They don't know what is letters of credit, guarantees, and other trade finance products. So they approached ICC to help them develop a document on trade. ICC at that time was having a AML task force. I was a member of that AML task force. Within the AML task force, they identified around 15 people who joined hands with FATF to help them develop this paper on trade. I was also one of them, and I met FATF team in Paris. That was maybe 2005 or something. So I had this viewpoint that FATF is actually becoming or taking pride in their efforts about this, because their efforts in AML and CFT are becoming more effective. That is why the abuse of the trade system is expected to become attractive for the money launderers. I don't really agree with that concept, because I know I came into trade finance back in 1981, and I started hearing about trade finance. I worked in a very, very tight regime of the exchange control regulations, as well as the trade control regulations, when banks were supposed to know and abide by the India's import-export policy, which was changing every year. Before you open an LC, you have to find out. So how the mechanism of trade finance could be used for violating foreign exchange regulations and these other things, including frauds. I have seen it. back in 80s. So I'm sure even prior to me, this was existing. So I don't quite agree with FATF that it is because of their efforts, because this has been there all along. The Monetary Agency of Singapore actually released a information paper, which they call Guidance on AML and CFT Controls in Trade Finance and Correspondent Banking. And I'm quoting from that paper. Due to its significant volume and value, trade finance transactions are an attractive medium for money launderers to transfer large value across borders. Trade finance can also be exploited for terrorism and proliferation financing. Now, what are the means of TBML? See, FATF, in their document on trade-based money laundering, came out with 5 traditional means of TBML, which are listed in this slide. Of course, everybody must be knowing under-invoicing, must have heard about it, under-invoicing, over-invoicing, multiple invoicing, over and under shipment, and false description of trade goods. So what happens is, by under-invoicing, the exporter actually is able to move the difference between the actual price of his goods and the invoice price to the importer's country. So this is an illegal remittance. For instance, I'm an exporter in India. I am selling goods for about, say, $500,000, and I am invoicing my goods for $300,000, and I tell the importer that you pay only $300,000. So importer is benefited because he declares to the customs the value of the cargo as at a lower price, and he pays a lower customs duties. And then I tell, as an exporter, I tell the importer that you remit the $200,000 difference to my account with a Swiss bank. So this is how I have created foreign exchange out of the country. By over-invoicing, conversely, the importer is able to move the, his foreign currency to the exporter's country. And then, of course, exporter takes the benefit of, tax incentives under the export promotion schemes. Multiple invoicing is outright a fraud. The exporter is doing one shipment and takes several copies of the same shipping documents and presents to several banks and walks away and takes multiple financing. Over and under shipment is almost the same. So the only thing is that instead of under invoicing, the exporter is actually showing the description of the quantity of the cargo as under shipment. Conversely, he can do over shipment also, and the net impact is same as in the case of under invoicing and over invoicing. False description of trade goods is, and this has really happened. This happened in the Middle East many times. It has happened many a times. It happens like, you export the, expensive goods and show the description of goods as less expensive, or vice versa. You export, say, silver and price the goods as gold. So, that's one way to walk away with money. Now, these are some pictures. Here you can see the exporter is shipping goods worth about $2 million to the importer company, but actually is invoicing him for $1 million, and the importer company is paying $1 million worth of this amount to the exporter company, and he is generating the, and of course I told you the benefits to both the parties. Now I know that many of the chartered accountants are bankers. They are in AML, and they are also auditors, and they are otherwise also interested in knowing, academic interest also, how this mismatch between the invoice value and the fair market price can be assessed. So I've created these two boxes. The first box talks about, of course, the under invoicing and over invoicing. The second box talks about the information that may be relevant for the bankers, auditors, even import-export companies to assess the money laundering and counter-terrorist financing risk. So you have to look at the category of the cargo, the description of the goods, the unit prices of the goods, quoted in invoices versus the fair market price of goods and the quantity of goods. But in these cases, invariably, there will be collusion between the buyer and the seller. In many cases, both the parties are actually affiliates companies and, this because, it's an outright fraud. And possibly the seller as the parent company and like that, Multiple invoicing can be judged by checking on the bills of lading. Now, how the bills of lading can be checked, those who are in the banking industry and are auditors, they may be aware that ICC Commercial Crime Services offers a trade document authentication check service to the banks. So a bank which receives a bill of lading can check with the International Maritime Bureau, which is actually a division of the ICC Commercial Crime Services, about the authenticity of that bill of lading. Bill of lading, for the uninitiated, is actually a document which is a title to goods issued by the shipping company, evidencing shipment of cargo from a port of shipment to a port of destination, indicating the description of the goods, the quantity, the weight, etc., blah, blah, blah. So if ICC can do a check on that bill of lading and tell the bank whether it is genuine, they will go to the physical carrier and check the authenticity of the document. It has happened, and it may be possible, that the copy of the bill of lading is that of a original. So what happens is I have seen it. In my career, I have seen. Unfortunately, I can see. I have seen hundreds of bills of lading, and so have some of my colleagues who have actually joined this session today. So, what happens is the fraudster, he gets to know of the original bill of lading, takes a copy, and then presents the document to a bank. Just making, yes.
Excuse me. Can I leave now because I have another commitment? I have another meeting at 6, so I will need some time. Thank you very much. Sorry. Okay.
Thanks for coming and joining. Thanks. All the best.
No problem. Thank you. All the best for you. Take care.
So what happens is that he takes copies. The copy is sent to the International Maritime Bureau. He changes only a few particulars, like the name of the buyer, the name of the seller, the name of the consignor, consignee, and of course the LC number under which the documents are to be presented. But ICC can have that wherewithal to check. They will check with the physical carrier whether you issued that bill of lading. And then they can say, yes, of course, we did not issue. So although the details are genuine, the shipment took place, but the copy presented is a falsified document. This is another example of, this is overshipment or short shipment. Here you can see the exporter is shipping goods worth $3 million, but understates the goods for $2 million. So he exports $3 million and understates $2 million and moves $1 million from exporter to importer. So it's basically the principle is saying that you misrepresent the facts of the shipment one way or the other. Now what happens is, what are the information that may be relevant for assessing the risk? Actually, the bankers, they don't know that this is possible to check. For instance, while I was in ABN AMRO, when I came to Bahrain, 1997, I was heading trade in ABN AMRO Bank. And there were several of my clients who were actually availing trust receipt financing, import, loans at post-shipment stage when the goods had already been, imported into the country. So I don't know, because the document is not routed through the bank. So I don't know what he's showing me a paper, which is basically an invoice and a bill of lading, and tells me to finance this. Now I want to know that whether it is genuine. Even at that time, I'm talking of 1997, 1998, I was very particular, and I asked him, I want to see the original, this one, and I also want to see a copy of the customs stamped bill of entry. So what happens is, when you, those who are in the importing business, they may be aware that when you, go to the customs to clear the cargo, you have to declare what you are importing and what is the FOB price of the goods, so that they can assess the duties and then levy duty on that. If there is a difference between what you are, declaring to the customs, and then you are also declaring to the bank, if there is a difference, then I will definitely not be financing that. And believe me, I have seen this happening even at that time in Bahrain. Later on, now, as I understand, we have around 13 banks member of the ICC Bahrain Trade Finance Forum. At least more than 10 banks are following the same practice. And Bahrain may be the only country in GCC, or maybe in the Gulf and Middle East, to insist on a copy of the custom stamped bill of entry in case you are financing direct imports. False description of goods. This is, this is a case of exporter shipping gold, $3 million, and invoicing silver. And that's how he has been able to under invoice. Now, how do you assess? Category and description of goods. Is the exporter known to be dealing in the invoiced goods? Now, what happened when CPB, when it was BMA, Bahrain Monetary Agency, they were the first in the GCC to come out with something called Money Laundering Regulation Act. In that Money Laundering Regulation Act, they had attached an annexure, which was actually a guidance note. Now, of course, this guidance note was later on withdrawn, but that guidance note had a statement: is the exporter known to be dealing in the invoiced goods? For instance, I have seen, it happened with me. I was in Dubai. I was in Bank of Baroda at that time. One of my clients who was importing textile goods and ready-made garments, fabrics and ready-made garments, he gave me an LC for 1 million dirham for import of onions from Ahmedabad to Dubai. Of course, it was an abuse of the system of the LCs. Even at that time, I'm talking on 94, 95, I refused to issue that LC. I refused. Second is, of course, you have to, the banks are supposed to check the unit price of goods vis-a-vis the market price. Of course, it is very, very difficult because it depends upon so many factors, but it is just a level of control that the invoice is very near the fair market price. And if it is not, then there could be a suspicion of money laundering. Of course, this can be done in services also. I have seen an LC covering, delivery of training services. I have seen an LC for construction of a stadium in Dubai. And if a 5 million dirham transaction, I confirmed the LC today, I was presented with documents indicating completion of the project the very next day, which is impossible. Now, I like to shift, after talking about trade-based money laundering, I like to shift to trade finance frauds. Now, I was recently talking to a company in Singapore on the same subject. And I told him that all TBML attempts are frauds in nature, although all frauds may not be TBML. They may be just criminal transactions. They may be financial crimes, but not necessarily trade-based money laundering. He says, how? What has got fraud to do with trade-based money laundering? So I told him, see, all the techniques of trade-based money laundering are actually misrepresentation of facts to conceal quality, quantity, price, existence or non-existence of goods or services. Now, misrepresentation of facts under the Indian laws, under the Commonwealth laws, under the English law, and the most legal systems is actually a fraud, including countries like Singapore and other places. So misrepresentation of fact is basically a false statement made by one party to another party, inducing that other party to enter into a contract or a transaction so that the other party sustains a financial loss, and that's fraud. So all trade transactions deploying TBML techniques are frauds. In the first instance, due to number one, misrepresentation of facts, and number two, falsification of facts to perpetrate a financial crime. By any chance, Mr. Kapil Batra is there as one of the participants? You can raise your hand or... Okay, no problems. Many of the financial experts, they know this gentleman because why I'm talking of Mr. Kapil Batra, because last time when I did a LC program, a seminar for BCI CAI in one of the hotels in Bahrain, he named this gentleman. So this gentleman is Mr. Patel, Mr. Madhav Patel, and very suave and pompous person, multi-millionaire and highly respected Indian businessman. I can share with you, his wife is the cousin of Mukesh Ambani. So it's not in something confidential. It is actually in public domain. So I'm sharing with you. This guy used to come to me in Bank of Baroda, Dubai, sit with me on my desk, but I never did a single transaction with him. That's God's blessings and hunch. He deployed all these techniques in misusing the mechanism of trade finance and walking away with $500 million from 26 banks in UAE alone. Emirates Bank lost 100 million dirham. ABN AMRO Bank lost 100 million dirham. Bank of Baroda lost, I think, close to 8 million dirhams. Union National Bank lost 40 million dirhams. Citibank lost 240 million dirhams. And that was the year 1999 when Citibank delayed, for the first time in their history, they delayed their balance sheet. And one of the banks in Dubai lost its capital. And ANZ Grindlays, they left the region. They wound up their operations from the entire GCC. There used to be a Bahrain Grindlays Bank. There used to be a Qatar Grindlays Bank. And ANZ Grindlays was, this having its big operations in UAE, they closed their operations because of this massive fraud. But this was not $500 million in UAE. It was another $500 million outside UAE. So banks in Bahrain, so I don't want to name the banks, but the banks, they know that they lost money in this massive fraud. And banks in Oman, banks in UK, banks in Brussels, banks in Germany, and one of those island countries, Jersey Island, they lost money in this fraud. So the name of the companies was Solo Industries Fraud. And that time, this fraud was dubbed as the fraud of the 90s, fraud of the decade. In one of the actual things, what he did was, he shipped 40 metric ton of lead ingot and took 10 copies, 10 multiple copies of bills of lading, indicating shipment of silver ingots, and presented to 10 different banks under 10 different letters of credit, and walked away with money for 400 metric tons of silver ingot. So one genuine shipment of lead ingot was done, and 400 metric ton of silver ingot money was taken out. Now some more techniques and TBML techniques and typologies. Fictitious trades. Fictitious trade, the shipment has not taken place. Ghost shipping or phantom shipping. So what happens is the buyers and the sellers, they collude together to ensure that all shipping and customs documents associated with the trade are routinely processed, and they present documents to the banks. Now, some other things which, I have seen, shipment date, and of course, with IMB checks, I was able to identify several of the transactions which were basically fraudulent. In fact, when I was with ABC, after assassination of Gaddafi, his loyalists to the erstwhile regime, they were trying to use the mechanism of trade finance to walk away with money. So one fantastic letters of credit, unbelievable letters of credit were being issued by banks in Libya in favor of companies in Dubai, mostly, and the LCs will come to me based on my previous experience with trade finance frauds and just hunch and suspicion. I checked all those bills of lading and I've unearthed not less than $200 million worth of transactions. There were about close to 50 transactions worth about $200 million, and I stopped all of them. Even I refused to advise or confirm some of the letters of credit, which I was not confirmed, which I was not convinced with. So what happens is, I saw in the secondary forfeiting market transaction, hand-filled CMR. I'm sure that most of you may not be knowing what is CMR, but those who are in banking and trade finance, they may be knowing a little bit of CMR. Is actually a road transport document, which is actually used in cross-border shipments in most of the EU countries, European Union. So naturally, since these are to be declared to the customs, they have to pass by the customs border, they have to be properly typed, properly issued. But I saw $10 million worth of transactions being sold to me in the secondary market by a bank in London. They consisted of CMRs, which were written by hand. So I was not convinced. How can a CMR is not typed? Even a small-time transport company in Dubai or in Bahrain, which is issuing a transport document for shipment from Bahrain to, say, Saudi Arabia, that will type a transport document. They will not issue a hand-filled CMR. So these are, unique features, so unusual features you can identify. Use of shell or fictitious companies. Of course, all of you are chartered accountants, you know what a shell company is. And I will talk about a multi-billion-dollar scam which happened in Iran, when I will talk about secondary forfeiting market transactions, how the use of shell or fictitious companies was used to walk away, to take cheaper borrowing outside Iran. Back in, that was prior to the penalization of banks by US government for doing Iranian transactions, and most MNC banks, European banks, they were doing. You know, name a bank, they had an Iran exposure. This is partial shipment, an actual event. There was a criminal organization who was actually, in order to hide, their activities, they were actually exporting. So they exported a small shipment of scrap, but reported several hundred tons of cargo in Canada. So when they put the cargo on the vessel, there was a Canadian customs officer who was very experienced. He noticed that the hull of the ship is well above the water level, which was inconsistent with the reported weight. You know, when you, unload hundreds of tons of cargo on a vessel, its hull will go down in the ship, in the water. So the water level will go up. But in this case, he found that the hull of the ship is well above the water level, and they investigated and the discrepancy is found. So, if they had not stopped this transaction, money of criminal origin would have found its way to Canada. Now, this is secondary market forfeiting fraud, a multi-billion-dollar. I did not use Iran here, but back in 2005, when ABN AMRO left this country and the operations were bought by Bank Muscat, which subsequently became BMI, I launched forfeiting operations for BMI. Several of the transactions were referred to me in the secondary market. The very first transaction was referred by a bank in Bahrain under a risk participation agreement to me. This was a $10 million cargo with $5 million participation. My first red flag, which I raised with this bank who shared this transaction with me, was how can a steel cargo be exactly $10 million, 10,000,000. It's not possible, because it will be weighted, there will be a rate, there will be insurance, there will be a freight. So, finally the CIF value of the goods will have, a few $1 million, a few $1 million, a few $100,000 plus a few cents. It is impossible that you have a transaction with exactly $10 million. Anyway, I checked the bill of lading with International Maritime Bureau. They told me that this vessel does not exist. It existed, but it was broken up. You have this in India, I think Jamnagar, the shipbreaking industry. So it was broken up in Jamnagar back in 1997. And this cargo, they checked with the port authorities. The port authorities in the port of shipment confirmed that the vessel never sailed. The port authorities in the port of destination confirmed the vessel never reached. So in brief, this was a outright fraud covering non-existence of cargo and non-existence of even the vessel. Later on, I found that about 66% of the bills of lading, which were referred to me covering shipment to Iran, they were actually, fraudulent. And I'm talking of top-class world banks, having trillions of dollars worth of balance sheets all over the world, Europe, China, Switzerland, everywhere. They were playing these transactions. They were buying these exposures, and then they were downloading these exposures, downselling these exposures in the secondary market. And I was a small bank, and if I want to bring my, build up my trade assets, I have to buy in the secondary market. So then I found that all these transactions, which are fake transactions, are Iranian transactions. The transactions to other countries were not fraudulent. So what will happen is, if you are an Iranian company based out of Iran and you wanted to borrow in the from an Iranian bank, the rate of interest was very high. It was 8 to 10% over prime rate, which itself was 8 to 10%. So you borrow at 16 to 20%. So what you do is you send one of your employees to Dubai, and this employee comes with a briefcase and establishes a company, which is a shell company, and then then the Iranian company will issue an LC through a multinational bank in Dubai, and that LC will be $10 million. And then this fellow, the shell shipping company, will go to a shell beneficiary company, or shell exporting company will go to a shell shipping company, take a fake bill of lading and present to the bank, and they will ask the bank to send to the bank in Iran, which is Bank Mali Iran, Bank Sadarat Iran, and that bank will accept the documents for to pay at maturity. Now the bank in Dubai will discount, and that bank, this particular bank, had $500 million as their exposure on Iranian banks, and they wanted to do more because the pricing was very attractive. So 3 to 4% over, over LIBOR. So this company is happily paying 3 to 4% of LIBOR, which was around 5% at that time. And instead of paying 16 to 20%, and at maturity, they will pay. So these were like, there was no fraud. But what happened was they used the mechanism. But my concern was not only this could be a fraud, this could also be an attempt to launder money. This could also be an attempt to attack the World Trade Center. So this could be terrorism financing, etc. So of course, I refuse to do all those transactions. Clone bill of lading is, is a new modern technique of, defrauding the banks. So what happens is the same document, bill of lading, is, cloned. Everything is same, and you can clone a bill of lading, take a copy which looks better than the original and it has happened in the world. Banks have lost, shipping companies have lost. So this document looks better than the original using sophisticated scanner technology. So what will happen is they are exact replica, and then they will be presented to various banks. Now, NVOCC, I don't know whether you know about NVOCC, non-vessel owning carrier companies. So these companies are actually freight forwarders, or they are authorized to book the cargo for the purpose of shipments. And then they also issue, this bills of lading. 95% of the world trade, world BLs, as per my statistics, are actually issued by NVOCCs and freight forwarders BLs, as freight forwarders companies. However, as per an International Maritime Bureau statistics, 97% of the misrepresented or suspicious bills of lading were actually issued by NVOCC and freight forwarders. So what they do is, they manipulate the BLs. Sometimes without shipment, they will issue the BL to walk away with the money from the banking system. ICC rules. I hope people are aware about the cycle of ICC, but I just quickly, included this slide. So what happens is there is an exporter exporting to an importer, and he's willing to part with his goods, but he wants to, to be assured of his payment. So the importer, he tells the exporter that I'm willing to export, but I need a letter of credit from your bank. So the importer approaches his bank, which is an issuing bank, and that bank issues a letter of credit, which is basically an undertaking from the bank to the exporter that in case you export the goods and present documents in accordance with LC terms and conditions, I hereby undertake to pay you. So the exporter has basically an undertaking, and issuing bank will forward to exporter's bank that LC, and he will advise that pass on that instrument to the exporter. Exporter will export, ship the goods, present documents to his bank, and the documents will be sent to the issuing bank, and he will pay in honor. Now, what is UCP? UCP are the ICC rules covering letters of credit issued all over the world. Hundreds of, as I mentioned, millions of letters of credit are issued every year, worth about close to $2 trillion every year, and they are governed by these rules. Every letter of credit has to say that it is subject to UCP 600. And once it says, then UCP 600, which is a set of rules, they take the contractual form. So the letter of credit and the parties to the letter of credit are bound to abide by the rules unless the rule is in contravention to local national laws. Now, UCP has, basically this is the slide I was trying to come to, certain articles which are disclaimer articles. There is UCP 600 Article 4A, which says a credit, which is LC, is a separate transaction, independent from the underlying sale or other contract on which it is based, and banks are in no way concerned or bound by such contract. Article 5 says banks deal with documents and not with goods, services, or performance to which the documents may relate. So banks don't deal in goods. In fact, when UCP 600 was being written, means UCP 500 was being revised to UCP 600, then there were more than 5,000 comments on the various UCP 600 drafts which were released to the ICC Bahrain, ICC national committees in over 90 countries. And only this article is the article which did not receive a single comment because everybody agreed that banks deal with documents and not with goods. There is an Article 34 of UCP which says a bank assumes no liability or responsibility for the form, sufficiency, accuracy, genuineness, falsification, legal effect of any document, or for the general particular conditions imposed or stipulated in a document, nor does it assume any liability, responsibility, etc. Existence of the cargo and bank is. So basically, this article is written by the banks, for the banks, of the banks, so that there is no liability for the bank. If something goes wrong, bank will recover money from the poor importer who never received his goods, and they will not pay to the exporter in case something goes wrong. So by nominating a bank, this is another article I will explain to you later. So this is what UCP said. But in today's world of trade finance compliance regime, in today's world of AML and trade-based money laundering and frauds, can bank and KYC, due diligence, can a bank claim protection under these articles that I'm not responsible? You open an LC and induce a bank or an exporter to export the company, and then your own client turns out to be a fraudulent party. So you have that responsibility of KYC. So can banks take protection under UCP in case of frauds or TBML attempts? That's the question. So actually this, what I'm trying to do after when I was talking to Ajay about the modus operandi of this program, I also thought to increase this awareness. So this is a very famous court case involving Banco Santander versus Banco Paribas. This was London High Court. They took a decision. So it was not, at that time, UCP 600 was not there. UCP 500 was there. At that time, what happened was basically an LC was issued by Banco Paribas worth about $18 million. The documents were presented by the beneficiary to Banco Santander, which was the confirming bank. Banco Santander found the documents to be in order and they undertook to pay at maturity. Banco Paribas, that time it was not BNP Paribas, it was Banco Paribas prior to the merger. Banco Paribas they found the documents to be in order and they undertook to pay at maturity. The company in London asked Banco Santander to discount now that Banco Paribas has also accepted the documents, they said, yes, no problems. Why shouldn't we? And they paid $19 million to the beneficiary's account. Now, what happens is just before the maturity, Banco Paribas came to know that there was a fraud. Basically, this shipment was supposed to be a shipment of oil through a pipeline which did not exist. So Banco Paribas came to know. They said, we are not going to pay against this document. And Santander said, no, you have to pay under UCP, etc., and the international standard banking practices. And Banco Paribas did not pay. They sued them in London, and this was a very big court case, having hundreds of pages of the judgment. How, in brief, the High Court of London, they ruled that Banco Paribas is right not to pay because there was an underlying fraud, and they came to know of this fraud just prior to the maturity. So this decision actually shook the banks, the world of trade finance, all over the world, and shook the banks. They were shocked by this decision because every bank worth its name was discounting a deferred payment undertaking. Now, I don't want to go into legal complications, but the London High Court said that if it was not a deferred payment undertaking, but it was a bill of exchange payable at maturity, the thing would have been different because bill of exchange is a negotiable instrument. And once it has been discounted, then it has to be discharged, at maturity in accordance with the bill of exchange laws. Anyhow, this is another court case. It happened in Singapore. This involves Solo Industry versus Credit Agricole Indo Suez. So in this case, what happened was BNP, this was not BNP Paribas, this was BNP, and BNP lost this case because they were the negotiating, confirming, and Credit Agricole, they did not pay at maturity because of the fraud. And fraud was done by Solo Industries. So they decided, due to a serious fraud suspicion, and the court ruled that Credit Agricole Indo Suez need not pay. So even if the documents were in order, even if there was if there was a fraud and they were, they did not pay. Now, come to this article, which I said I'll come back to this. So UCP tried to fix the case of Banco Santander by nominating a bank to accept a draft or incur a deferred payment undertaking, and issuing bank authorizes that nominated bank to prepay or purchase a draft accepted or a deferred payment undertaking incurred by that nominated bank. Which means, going back to this slide, if issuing bank issues this LC and nominates this bank to negotiate the documents presented by the exporter, then issuing bank undertakes to pay this, to reimburse. So under this article, the nominated bank has a right of reimbursement if he has accepted and discounted. So this was basically an attempt to fix this case, Banco Santander versus Banco Paribas. But did this happen? I'm talking of Bank Awal Bahrain. Awal Bank, everybody knows this was placed under moratorium. This bank issued an LC for $40 million at the request of its parent company, Al Gusebi, which is payable to Bangay. This is skipping. This LC was confirmed by Abu Dhabi Islamic Bank, and they took a confirmation fees of $500,000. Fortis Bank, they negotiated drafts and paid beneficiary, and then claimed reimbursement from ADIB, Abu Dhabi Islamic Bank. But Abu Dhabi Islamic Bank refused to pay because at that time they came to know of the financial difficulties being faced by Aval Bank, although Aval Bank was not closed at that time. So Fortis Bank sued Abu Dhabi Islamic Banks in New York. Then the case eventually went to the Supreme Court of New York. This is from 2010. And New York court ruled in favor of Fortis Bank. Even if there was a fraud, Abu Dhabi Islamic Bank must pay, even if there was a fraud. So this article of UCP did not work in this case. Of course, there were specific circumstances of this case. Now, some live cases which I like to share with you. There's a movie called Perfect Murder. This is a perfect fraud. So there was a chemical trading company. They set up a company in, I'm sorry, Liechtenstein. I don't know how to pronounce this word properly, and went to a firm of reputed lawyers in Lugano, Switzerland. And then they asked the lawyer, this happened with a law firm in Bahrain also, a very famous, prominent law firm also, unfortunately became, a victim to such a fraud. The lawyers agreed to act as fiduciary, allowing trading company to use their address as its operating address until the time the trading company. So now this company has a fantastic address in Lugano. So what they did was they went to, their buyers, so-called buyers, and they came to a company in Middle East for supply of 6,500 metric ton of caustic soda to a Middle Eastern oil company, and they offered that consignment at a price just below the international market price. The company was attracted. They issued an LC, and this company presented documents worth about $2.5 million and walked away with the money. So documents were fake. Shipment was never made. This is another example. This happened in Jordan. One fraudster, they got an LC from a Jordanian bank. Now, there was a typographical error in the LC. The LC required an inspection agency certificate, but they typed the name of the inspection agency slightly wrong. For instance, Society General was named, spelled out wrongly. Now, what this exporter knew under the UCP circle, that in case documents are exactly as per LC terms, the issuing bank is bound to pay. So what they created was they created a fake ship inspection certificate with exactly the same spelling errors. Now the checking staff, the document checking staff knew the correct name of the inspection agency. He knew that there was a error in this typographical error. So what he did was he reported to the management that how come there is a document inspection certificate is presented which is actually with the wrong error, with the error in the name. So the bank asked the beneficiary, so we would like to discuss with you about this case. Obviously, the beneficiary never appeared. And this happened in 3 banks in Bahrain. I deliberately included this, that some of these 3 companies, very, these prominent importing companies in Bahrain. So what this company was basically registered in Netherlands, Antilles. They were having an account with a bank in Vienna, and they came to Bahrain in person. They met these companies and showed them pictures of the consignment they claimed to store in a warehouse in Jordan. So they said, we will do the shipment by road. However, we don't want to supply you just like that. We need an LC. We will present documents through our bank, and we will, then we will do the shipment. The 3 companies, prominent companies, they agreed. They issued 3 LCs. at least 3 LCs that I'm aware of. And they presented documents worth about close to 5 million euro. And these were presented to 3 banks in Bahrain. And I'd like to show you a picture of that document. I'm not aware whether I can share that. Let me try. No. Okay, let me open that document. Can you see this?
Yes, sir.
Can you please see this PDF document on your screen?
Yeah, yes, we can.
Hello?
Yes, sir, we can
Ajay?
see it. Yeah,
Somebody
we can
can unmute and tell me whether you can see.
Yes,
We
we
can
can see,
see.
sir.
We can see it, Pradeep. We can see it.
Hello?
We can see it, yes.
It's fine, Pradeep. We can see the PDF.
Ajay,
We can
I'm
see
going
it.
to share this document, the PDF document. I hope you guys can see this.
Yes.
So this is a document which was presented to 3 banks in Bahrain. This document is known as CMR, and it is, done as a road transport document, indicating the name of the transport company, Global Goods Transporting Company, Safat, Kuwait. I called this company. They said our phone number is correct, but we never issued this document. And another thing is that this document is CMR, and in the GCC or Middle East, they never use the CMR. Second, I want to show you a certificate of origin, which is issued in 3 languages: English, French, and Turkish. And here, if you see, there is a stamp, Chamber of Commerce Kuwait, and within this stamp, you have the national stamp or logo of UAE. And there is nothing called Chamber of Commerce Kuwait. There is a Kuwait Chamber of Commerce and Industry. And then, this somebody is even signing in Turkish. So how can a Kuwaiti Chamber of Commerce issue a document in 3 languages? Obviously, this was a fraud. And these 3 banks did not pay a single penny, despite the fact that this document was in accordance with LC terms and conditions. Okay, I'll go back to my presentation. So we are coming to almost the end of the presentation. These are the red flag indicators. Of course, one, I gave you the example of a company importing goods in a product which they are not known to be dealing in. These are live cases. Steel company starts dealing in paper products. How come a steel company requests a bank to issue a letter of credit in paper products? IT company starts dealing in clothing. Pharmaceutical company requests LCs for marble slabs. I'm talking of new medical center, which left $6.6 billion of outstanding last year with the banks as debts in the banks in 2020. In fact, they were the client of my bank also. They requested me 3 LCs worth about, I would say that maybe $6 million or something, covering shipment of marble slabs from India to UK. And I refuse to open these LCs. What has a new medical center got to do with marble slabs? Why they are importing? Are they building up a palace in UK somewhere? Why they are importing this one? And it is not covered neither under their license, nor it is covered by the this facility agreement. So they could import pharmaceutical products. They could import healthcare equipment, they could import medicines, ingredients, chemicals, but they could not import. So we refused. Eventually, this company now has shown a $6.6 billion outstanding, and several banks have lost money in this. And this, which when it happened, when I refused to open this LC, that was in March 2011. So 9 years ago, I talked to Future. And this is the one I was telling you in Dubai, that this company requests LC for onions. Customers conducting business in high-risk jurisdictions or shipping items to or through high-risk jurisdictions, including transit through non-cooperative countries. These are all red flag indicators. There may be, some of the transactions may be genuine, but somebody who's dealing with export or import or dealing with these transactions in trade, they may be, they should raise red flags. The shipment does not make economic sense. I have seen a LC for $4 million of NMC in 2018, which went wrong. They issued an LC in favor of a company in Singapore who is apparently storing, stocking for sale ingredients to medicines in a very highly sophisticated, hygienic, air-conditioned warehouse maintained by a trading company in Dubai. And based on this LC in favor of Singaporean company, NMC's bank will undertake to pay to Singapore. This transaction was just referred to me, and I said that this does not make an economic sense. Why should a Singapore-based company maintain, and why, this is itself such a big company, why don't they maintain their own warehouses? And why should somebody, and why should they not import directly from the Singaporean company? And why through a trading company? And why through a road transport document? For the simple reason that a road transport document does not pass the customs. There is no statement or declaration which is known in the world of GCC commerce as bayan. An exporter will make a bayan, which is a statement of what I'm exporting at what rate I'm exporting. And or a bill of lading or an airway bill which can be checked through the International Maritime Bureau, but there is no control. So this is a red flag. Road transport document, letters of credit could be fraudulent. Discrepancies appear between the description of goods on the bill of lading and the actual goods shipped. Significant discrepancies appear between the value of the commodity and the fair market price. Size of the shipment, and this happened in in Dubai. One company which claimed to be exporting billions of dollars worth of cargo. And, these bankers decided to, before they approve a facility, they decided to, visit the offices of this company in Dubai, and they found a few skeleton staff. Actually, this also happened with Solo Industries, that they were opened only when the banker, they were having a aluminium smelter small plant in Sharjah. So what will happen, they will open that plant, people will start working only when bankers were visiting. Otherwise, they will be closed all the time. So they saw this, and the number of staff did not appear to commensurate with the reported turnover, I mean, the reported volumes, reported volumes of business. Type of commodity is high risk, potentially high risk activities. Their goods are maybe subject to export-import restrictions. A few years back, my bank asked me to, list out the commodities which could be prone to frauds. So I told, based on my experience and my association with the International Maritime Bureau, I said, the frauds are not restricted to a particular, geographical distribution of countries or particular product category. It can be anything. However, you need to be suspicious or be careful when the goods are, like following. Military or police organizations of foreign governments are involved, weapons, import of weapons and ammunitions, chemical mixtures, defense articles, sensitive technical data, nuclear materials, gems and jewelries, metals, ore, crude oil, goods of wildlife, hide and skins, ivory, sandalwood. Recently there has been a talk of trade-based money laundering in wildlife, and this list I created in 2014. So live animals, birds of endangered species, plants, etc. Antiquities. So these are all, goods, suspicious goods. So they could be red flag. Recently, FATF and Egmont Group. Egmont Group is the group of the FIUs, which is Financial Intelligence Units. They are, they came out with some additional, there are many. So considering the time constraints, I thought that it may not be possible to touch base all of them. But basically what they're doing is they're reinforcing the addresses and KYC documents and what their staff is doing, negative news and shipping routes, unconventional use of financial products, LCs with repeated amendments with no apparent reason. So these are according to FATF and Egmont Group, this is a red flag indicator. So that's all. I try to be a little fast because so I have taken exactly little less than 90 minutes. So thank you very much, Ajay, and all of you for giving me this opportunity to share my little knowledge on trade-based money laundering and trade-based trade finance frauds and LCs. So I just like to give you a small slide on my own company. So my company is known as Taneja Global Trade Consulting Company. After I retired as a group head of trade technical services with ABC Bank, I set up my own company and I advise banks, law firms, export-import companies, training institutions, auditors, etc. And I do, advisory on procedures, products, LCs, and guarantees, counter guarantees, standby LCs, etc., including trade-based money laundering and trade finance frauds, trainings and everything. So this is all about my presentation. Now we will come to Q&A. I see that there are some questions in the chat box.
Yeah, Ashwin,
Yes, sir.
you can probably read out the questions so sir can answer.
Yeah, sure. Thank you, sir. It was quite an insightful session. We have 3 questions here.
One
Yes.
is, can we get this presentation?
Yes. Can we have this presentation? I think they all have found this so interesting and so insightful.
Of course, I'll share with Ajay. and then he can share with the members.
Thank you, sir.
And there's a question from Mr. Mani.
Yes.
Blockchain technology can reduce or eliminate the fraud. Can you elaborate any such initiative taken by ICC or Trade Finance Forum? Yes, ICC has recently taken, actually this is a very recent initiative. A few years ago in 2013 or 2014, ICC created a working group on digitalization. They came out with digital rules. They came out with EUCP, electronic UCP. They came also on EURC, which is electronic version of uniform rules for collection of documents. And they have also taken now recently something called DSI, which is a digital initiative. This is a global initiative which is working with this thing, and blockchain will be a part of it. Unfortunately, ICC Bahrain is currently not a member of this initiative, but we will be taking actions when they will release the documents. We have in the past created a working group, small working group, to review ICC newest uniform rules for digital trade transactions. And we commented, ICC Bahrain commented on based on our understanding, we commented on this document. And this document is going to be voted for approval next month. So this document is ready for release to the world of trade finance in July. So ICC, of course, will do. And, I'm not an expert on blockchain technology, but I have got a friend who is an expert on blockchain technology. He's also the technical advisor to the ICC Banking Commission. Is based out of Denmark. And I was discussing with him. He said, yes, it can do a lot. It can do a lot, but in order to really roll out blockchain technology, or in other words, based on my limited understanding of this one, electronic platforms, that all parties have to be on the same platform or something acceptable. So same platform, for instance, the exporting company, when they are presenting documents electronically, importing companies, when they receive the documents electronically, the issuing bank, when they issue the letter of credit, the confirming bank, when they handle that document, the shipping company, which is issuing an electronic bill of lading, the customs authorities, because the bank will also have to issue a delivery order electronically, and the customs authorities will have to accept that delivery order electronically, and that they would be able to do it, I think, based on the same electronic platform. So there's a lot, I think, there's a long way to go, but the initiatives have been taken, and they have been actually given a boost last year when COVID happened. And then, ICC propagated the cause of promoting digitalization of trade and issuing letters of credit electronically and accepting PDF documents, PDF copies of the documents remitted electronically. So in the letters of credit, they advocated the letters of credit this was also in a way to attempt to mitigate our perceived risk of force majeure, because what happened was when COVID-19 was declared, many of the companies took protection under the force majeure laws, and they declared force majeure, saying that there was a force majeure situation. As such, we don't want to honor our commitment. In fact, this Chinese government, one body, trade body, ICC, this chamber of, I forgot, ICCPIT, something not, China Council of the International Promotion of Trade. They started issuing tickets to their clients or to their members, which was known as force majeure ticket, that they were closed and banks were closed. In fact, Chinese government had imposed last year in the month of January a complete force majeure, complete lockdown, which was actually force majeure. But whether it is a force majeure, Supreme Court of India and many courts, including in US, they declared that
force majeure, that closure of a bank is not force majeure, because under the, there's something called, disrupt, what is that? Off center, this, can somebody remind me of, anyhow, you work from offshore. In case of problems, the banks can, from a remote, center, the bank is supposed to work, and since the bank can still do the transaction.
Disaster recovery plan.
Business continuity plan.
Second question is synthetic LC business that is often sourced by banks predominantly from global commodity players. We often see structures prone, and I'm sure that, this is my very good friend, Mr. Ali Abbas, and he is the CRO of a bank, and he raised, okay, synthetic letters of credit. If you allow me, I can share something else with you. Just hold on. Huh?
So before that, can you explain a little bit what is synthetic letter of credit?
Okay, I think I'll speak about synthetic or so-called structured trade finance. There is a thriving market in the world, especially involving large commodity trade houses based out of Switzerland, Geneva, US, Singapore, and other centers, where companies like, you name a multi-billion-dollar company, they issue, they request the banks to issue these so-called structured letters of credit, where the beneficiary and the importer company are basically associate companies, like, for instance, Cargill, Trafigura, or Bunge, or, in one jurisdiction, they will open the LC in favor of their own associate company in another jurisdiction, and the same shipping documents will be presented under that LC. Now that LC will be actually, now what happens is this, there is a, what's the rationale of this business? ICC has not come out with a position paper on this, whether it is right or wrong, but they came out, the ICC Financial Crime Risk Policy Group, they came out with a paper on this document, which is an internal ICC paper, and the legal committee of the ICC Banking Commission also worked on this. So legally speaking or technically speaking, there is nothing wrong to these kind of transactions. However, these transactions take place. So what is the reason? For instance, in one jurisdiction, like in US, if the order is like Bunge US is exporting and making profits. However, what happens is that the rate of interest, the tax rates are very high. So they book their transaction in say Dubai with nil or lower tax rates. So what happens is they shift, these, they also called it tax avoidance. It's not tax evasion, tax avoidance, and which is perfectly legal. And what happens is they, this book these transactions in a lower tax regime. So this is what happens. So these are legitimate transactions. However, a certain percentage, a very high percentage of these transactions are also frauds. Because what happens is typically, and the word synthetic is actually knowing from the first instance that a shipment will never take place. What will be presented to the banking system is a copy of a document. I saw an LC from Dubai, from Abu Dhabi actually, where the documents indicating the name of the consignor, consignee, or the description of goods, or even the LC number different than the actual LC number acceptable. So what is this, so obviously, you are presenting to a bank documents
under an LC which is issued by another bank in favor of another company. And obviously you may have taken financing from that bank and you are presenting the, so what happens is the banks are trying, or the companies are trying to convert their non-funding facility into funded transactions by taking this funding from the banking system. So that is one way. What my friend Mr. Ali Abbas is asking is basically the transaction where the company opens an LC from the bank and provides 100%. I have opened this kind of LCs, one single transaction for $200 million, which was fully cash collateralized. So $200 million worth of cash was given to me to open an LC, which accepted copies of the documents, and the documents were presented. Documents were discounted, and the discounted proceeds were actually, collateralized with the bank at a certain. So what happens is the interest rates on the funding, as well as the interest rates on the deposit, because this was collateralized, was the difference between was the interest rate arbitrage, wherein this company was operating, and the bank's credit committee was convinced that as long as we are safe with the 100% margin, so there is no problem. Now, Mr. Santosh has asked how we will be able to check this practice if there is no financing. If there is no financing, and yes. Now what happens is, let me tell you, a company in Dubai, real cases, real case, a company in Dubai who claimed to be exporting on open account basis to a company in Jordan, dry milk powder, shipment of dry milk powder. So what happened, they issued two set of invoices. One was the real or maybe higher to raise funding from the banking system. One was, actually to be presented to the customs, which was slower, but this company presented, for the purpose of, it was not the funding, it was the payment at maturity. So at payment at maturity, the company availed their overdraft facility, and then they said to pay against this invoice, etc. And then, the compliance department of this bank checked on this thing, and they raised a question, and they came out to know that there were two set of invoices. And unfortunately, the relationship manager, who was not fully aware, he said that this is actually industry practice, and this happens. So this is very unfortunate, because this practice is a written typology included by, the FATF. So the only way to check if there is no financing is done, but the documents are still routed through the banking system. For instance, on collection documents, you can still check through the veracity of that document through the International Maritime Bureau. Of course, they are expensive and they charge per query, but they provide this service. And in my bank, our thinking was, we don't mind paying some thousands of or hundreds of thousands of sterling pounds to International Maritime Bureau if we are able to save or protect the bank even from one single fraudulent transaction, because that will be worth it. Because apart from the monetary loss, you are also risk reputational losses, in front of the regulators, and who knows that you may be even penalized by the regulators. So there is a way and to check this. And of course, if you know trade finance, there is a possibility. I will give you a real life example. An exporting company met, I don't know whether I should share the name of the, this branch manager of that bank, but he was a cricketer. He was on the Indian cricket team. I'm talking of maybe 30 years ago. He was on the Indian cricket team. He was, as you know, the banks offer jobs. So he was chief manager. He was made chief manager of a branch. One of the exporting company
this met him, and they say, this I'm an exporter, and they met in a restaurant, and this exporting company offered him lunch and paid for the lunch. Sir, you are such a great cricketer. In fact, he was the opening batsman for India, and later on he was a banker. And then he says, I export, I don't need any facility from you. I don't need any financing. What I will do is I just need a bank account. You open a bank account. Currently, I'm dealing with such bank, and I have to come to your bank. The chief manager said, fine. Then he said, okay, I'm presenting documents. These documents are actually, I don't want funding from you. You just simply handle the documents on collection basis. And when you receive the money, you pay me. He presented $600,000 worth of documents covering shipment by air of ready-made garments. Red flag number one, an air shipment will be of ready-made garment will be for $50,000, not $600,000. Even if he did it, he consigned the goods directly to the Hong Kong-based beneficiary, and he disappeared from the scene. Now, what has happened is he shifted the goods. Hong Kong-based beneficiary received the cargo, never paid, and he also claimed incentives. One of my friends who was actually working in that bank discussed with me about this case, and I told him to send him a registered notice on his bank account address, and it came back, the registered notice, because that address does not exist. This was in Delhi, a residential address in Greater Kailash. So he used a fake address and all that stuff. Anyway, this is the way, I told this guy to report this transaction to Enforcement Directorate. So this was reported, and probably they raided or no, I don't know what happened to that. But there is a way to check. And
yeah, the next question, sir.
There are new technologies emerging which are mainly to prevent bypassing sanctions, such as cover tracking the ships. Yeah, it's there. And, this actually, there is a convention called SOLAS Convention, which is United Nations Convention on Safety of Life under Seas Act, which is united in 1974. Under this convention, the vessels and ships are actually, required, certain category of vessels, with a, large vessels with a certain amount of weight, minimum weight capacity, they are required to, put a device which is known as transponder or automatic identifier system, AIS system. So under that AIS system, through the satellite technology, you can see the the whereabouts of the ship. So basically, the idea was that assuming that there was some problem in the sea, like the sinking of the vessel, or typhoons, or these winds, and there is a problem with the vessel, the captain of the ship will give an SOS, and through the satellite technology they will do it. But now what happens is that shipments are made to Syria, shipments are made to Iran and other sanctioned countries. So what will happen is the vessel will actually switch on. It has happened in Oman, in the waters of Oman, or in Jebel Ali, UAE. Then the vessel comes to Iran, and then this switches off the AIS system, hoodwinks the satellite, and nobody knows the whereabouts, where the vessel went, offloads the cargo in Iran or Syria or somewhere else, and then come back to waters, and then switches on the AIS. But there is a device. There are some companies, like we are talking, actually ICC Bahrain Trade Finance Forum is talking to a company which is specializing in offering a service to the banks, whereby even if the AIS system is switched off, the bank will raise a query and will find out whether the vessel went to Iran or not. So these are actually, this is the thing. Of course, there are various ways and mechanisms.
including in public domain and this websites, but websites are not to be relied. I will rely on these specialist companies who are providing, these services to the banks on vessel checks. Thomson Reuters, and many such companies are there, which are offering these facilities to the banks. So that's it. Ajay?
Yes, sir. Thank you. Thank you so much. I'll probably let Ashwati take over. But I was just wondering, the beauty of such webinars is, the number of years of experience that you have in trade finance is like, more than the age of many of the participants. So it is such a nice medium to, share such a wealth of experience, from practical cases.
Thank you, sir. Yeah, sorry, Ajay.
Yeah, no, go on. Okay.
Thank you, sir. Sir, on behalf of Bahrain chapter of ICA, thank you very much for such an interesting session. I believe what made it so interesting was the real life examples which you have shared with us, and also the red flag indicators, which made the session very valuable. I'm sure audience would agree with me that the session was very insightful and knowledgeable for all of us. So we would also like to thank, on behalf of the chapter chairman of ICC Bahrain, Mr. Rashid A.R. Ibrahim, for addressing us in today's event in spite of his busy schedule. I would like to thank all the participants on behalf of the Bahrain chapter for attending this session, and also Chairperson CA Ajay Kumar and executive committee members for their efforts in seamlessly organizing this event, and also for providing me this opportunity to be the MC of this wonderful session. With this, I would like to hand over the control to CA Vivek Gupta, who will be conducting the quest program. Thank you again to all of you. Take care and stay safe. CA Vivek Gupta, you will be.
Thank you so much, Ashwati. And thank you so much, Pradeep sir, for giving me this opportunity to have quizzes based on your content. It was really interesting to go through the content itself. So now, without taking much time, I'll start the quiz. So guys, floor is mine, the game is yours. We are going to have a Kahoot quiz of 15 questions. The rules will be same as always. And the winner will take home the commitment points, which they can utilize on different options provided by BCICI. So now I'll share my screen.
Vivek, can I participate?
Yes, Ajay, I thought about it earlier. So you are eligible enough. As a disclaimer, guys, BCIC XCOM is eligible for participation in Kahoot quiz because this is solely prepared by myself and no one is aware about the questions. So Ajay, you are eligible.
Yeah, please use my first name and the membership number, otherwise you become eligible. So Samson, I don't know, ASM is. Rakesh ji, if you can just exit and maybe join again using your first name and membership number. So we have time, so you can probably exit and join back.
Samson and Rakesh ji, we request you to join again. Can you put your membership number as well with your name so that we can identify it later? For all the new members, in case if there are any who have never used Kahoot, the game pin is appearing on the screen. You can go to kahoot.it and enter the game pin and enter your name followed by a membership number and you are eligible to participate in the quiz. We'll wait for 3 minutes for other participants to join. So far, 27 is the number and 89 participants are there in the meeting. So we'll wait for 3 minutes, then we'll start the quiz. Thank you, everyone. I request everyone to join on time so that we can start the meeting. We'll wait for 1 minute, 30 seconds more, then we'll start the quiz.
Not much movement.
If you wait more, number will go down.
You can start, I think, at 20 now. Yeah.
For 30.
Yeah.
So if I have the chairman's permission, shall I start?
Yes, yes, please. I think we've given enough time.
Thank you. So let the game begin. A basic simple question. So guess we have 5 wrong answers. The next question. Okay, Ajay, so you prepared? Which of the following is not a traditional means of TBML? Correct. Most of answers are right. The scoreboard is, you can see Ajay is on the top, followed by Rohana and Naresh. The next question is true or false. Under-invoicing or over-invoicing is also known as multi-invoicing. So guess most of answers are wrong. A trade in which seller may not ship any goods, but collude with buyers to ensure that all the documents are processed. Is it go shipping? That is right answer. So the scoreboard remains same with Ajay on the top and Rajesh on the second place, but Jonathan has come on third now. Now identify the person. In this one, you have to type the name. You have to type the name, guys. You have 20 seconds remaining. I expect all the answers to be right in this one. See, correct answers. Okay, very less. So the scoreboard remains pretty much the same. Now the next question is, which of the following is not a legal case related to trade finance? Some of you must be having reminiscence of old days, Balfour versus Balfour. This is one of the case in our CA curriculum. So Rowana is again on the top within 3 votes, with Nath following on the third. Yes, one interesting question here is, what is the BCICI's theme of the month? Just 14 right answers. So now the scoreboard is led by Rowana and Jonathan within the family itself. As per US officials, trade-based money laundering is defined as an alternative remittance system. Now the scoreboard is Jonathan on first, Rowana and Ajay is on third. Siddharth and Narth are on the top boards. Which of the following is not true about Pradeep Taneja? Most of the answers right, which I was expecting. Now the scoreboards remain same, and Rajesh is the highest climber. This is a double points question, guys. So from how many states the BCICI has showcased the entries for cultural and dance forms? This is related to the video shared yesterday for reference, in case if anyone doesn't remember it. That was quick. So 8 states. Force a little bit change in the scoreboard. We are left with 5 questions. One right. Scoreboard remains same. Let's see who gets this right. Still, who thought, by the way, it's Mahesh Kumar Narayan this month? So now the third last question is, see, Deepa Shetty presented the video on cultural heritage of which state? Jonathan, Ajay, Rowana on top, Farhan on 4th and Siddharth on 5th. Let's see who gets the prize then with second last question. 18 correct answers. Now with that, the scoreboard remains pretty much same, and we are going to move to the last question of the quiz. That is, come on guys, come on. Correct answers, and let's see the final scores. Podium, Jonathan on third. It seems there was a change, and the first position goes to Ajay. So Ajay, guess I have a declaration.
it's that I'm not eligible, I know. In any case, okay, I will be voluntarily.
You can give it to Quizmaster, Ajay.
I will be voluntarily not taking it. So I think the prices will go one down.
No, even though you didn't opt the correct one for the month of theme of the month, you scored wrong, I think, Ajay.
Yeah, I in my hurry actually I didn't see the last digit, so instead of 75, I clicked to 70. So
that's actually Ajay, that was really wrong actually.
Yeah, so because of that, I'm
sets up theme of the month.
Because of that, I'm disqualified.
But anyway, I congratulate all the winners, and you'll get your commitment points, and you can utilize it to get items from BCICI, as Ajay mentioned during the start of the meeting. I thank everyone, and over to you, Ajay.
Yeah, thank you so much. So Pradeep ji, I don't know if you're still there. Pradeep ji, it was really a pleasure having you. I think it was a wonderful session. I am sure everybody will agree to that. Anybody who was hearing this, I think the whole the beauty of the whole presentation was the live cases. You know, it's many of the times, even when I am doing training sessions on money laundering, etc., people think it's fiction. Things that may not actually happen in real life. So when somebody like you actually presents, you know, live cases that you have seen through in this thing, I think this is what enhances such a learning session, that, you know, these are not things which are just on, you know, theoretical, but it actually happens across the world. So I think it was a wonderful session, and thank you so much also for, I think you were bang on time. We were very lucky that we could take all the questions that were raised as well. So thank you so much again for that. And as Mr. Rashid was mentioning, we will probably explore some opportunities together with ICC Bahrain, you know, something that BCICI can do. You know, one of the elements, like I mentioned, is BCICI is now kind of recognized like a trade body by the Ministry of Foreign Affairs of India. So we could definitely work together on some initiatives on trade, etc., for you know, relating to Bahrain and India and so on. So thank you so much, sir, again, and thank you, Ashwati, again. Like I mentioned, wonderful and very nice of you to take up the role. I hope more people will come forward to take such roles, and this is part of the, you know, the fun of being a member of the association. So everybody gets to participate in the events, and this is what makes it truly a you know, inclusive organization, if I may say so. And finally, of course, Vivek, he stepped in at the last moment. I think we had another person lined up for the quiz, and he could not make it because he was not well. And Vivek, sportingly as always, took it up. Although I was telling Sharmila, maybe he has not done anything else, so let him do this at least. Just joking, but very nice. Very nice set of questions, Vivek. So very well done. So thank you all for the participation. I think wonderful participation. I was looking at it almost past 150 on an average through most of the presentation. So that's really, I would say, probably one of the highest numbers that we have had in a technical session this year. So we've always been above 100, you know, 120, 130. So close to 150 on a regular basis was quite a good number. So I thank all the participants also who joined in. So with that, I probably let you all, you know, enjoy whatever is left of the weekend. Have a good evening, all of you, and see you. Bye until the next event. Thank you.
Thank you very much.
Thank you.
Ajay.
Thank you.
Thank you, sir.